For decades, we've been told renting is throwing money away, but in 2025, with the average new mortgage payment nearly 40 to 50% higher than rent, it's time to rethink the rules. Let's break down today's housing reality with real numbers. Before we dive in, hit subscribe and turn on notifications. We share weekly breakdowns of money moves that matter. Part 1, the new math of affordability. Let's start by challenging the old affordability rule. The old rule was that your housing costs shouldn't exceed 30% of your gross income. The new reality is that a new mortgage payment is consuming 40% or more. Let's run the numbers on that $420,000 median-priced home. Down payment, 5%, $21,000. Loan amount, $399,000. Mortgage rate, 6.7%, 30-year fixed. Principal and interest, or P&I, $2,570 per month. Now let's add the rest of the payment. Property taxes, average of 1.1%, $385 per month. Homeowners insurance, average, $150 per month. Total PITI, $3,105 per month. By comparison, the national median asking rent is around $1,950 per month. That's a premium of more than $1,150 every month. This is the new math. Part 2, the triple threat risk of buying now. In a falling or uncertain economy, buying a home exposes you to 3 massive risks that renters simply do not have. Job security risk. We've seen layoffs across tech, media, and other sectors. If you have a $3,000 mortgage and you lose your job, this can cause severe financial strain. You can't just break your lease. You could face foreclosure and significant financial stress. Market risk, or getting stuck. What if you need to move for a new job in 2 years? After you pay 6% in agent commissions and closing costs, you'd need your $400,000 home to have appreciated to over $425,000 just to break even. In a falling or flat market, you are stuck. You could be forced to sell at a loss. Liquidity risk. This is the most important one. To buy that house, you sunk $20,000 plus into a down payment. That cash is now gone. It's locked away in an illiquid asset. In a recession, cash is king. It's your emergency fund. It's your opportunity fund. Buying a home can tie up your cash in an illiquid asset, limiting flexibility and putting you in a risky position in uncertain times. If this breakdown is helping, give this video a like. It tells the algorithm to share this with more people who need it. Part 3, the true cost of ownership, or the iceberg. Your $3,105 PITI payment is just the tip of the iceberg. The hidden costs below the surface can quietly sink your budget. The 1% maintenance rule is a well-accepted rule to budget 1% of your home's value for annual maintenance. Cost, 1% of $400,000 equals $4,000 per year. Monthly budget, that's an additional $333 per month you must save. This isn't for upgrades. This is just to keep the house from falling apart. It's the roof leak, $1,500, the new water heater, $1,800, and the electrical panel fix, $2,000. When you are a renter, your cost for these items is $0. You sent a text to your landlord. When you are an owner, you pay 100%. So your true housing cost is not $3,069, it's $3,402 per month. Part 4, the strategic case for renting, or also known as rent and invest. This is the mind shift. You've been told renting is throwing money away. Let's debunk that. The thrown away money math. As an owner, in your first year, over $2,200 per month of your $2,570 P&I payment is pure interest. Add your $535 in taxes and insurance, $385 plus $150, that means about $3,105 per month is thrown away to the bank and government. As a renter, you throw away $1,950 per month. In this 2025 market, you are literally throwing away $1,145 less money by renting. The rent and invest strategy. This can be a smart way to build long-term wealth. You rent for $1,950, you take the money you would have spent on the true cost of ownership, $3,105, and invest the difference. Difference, $3,105 minus $1,950, is $1,145 per month. You keep your $21,000 down payment safe and liquid in a high-yield savings account earning 4.5%. You invest that $1,145 every month into a low-cost S&P 500 index fund. Renting in a high-interest rate market can be a smart financial strategy depending on your goals and circumstances. It gives you liquidity, cash on hand, flexibility, you can move for a job, and a disciplined investment plan that builds liquid net worth, not just illiquid home equity. Part 5. Your 5-point buy or rent checklist. How do you make the final call for your city and for your life? Use this 5-point checklist. The time horizon. Are you 100% certain you will live in this exact home for 7 to 10 years? If the answer is no, buying may not make sense unless you're certain you'll stay 7 to 10 years. Transaction costs will likely be a losing proposition. The all-in cost is the true monthly cost, PITI plus 1% for maintenance, less than 30% of your monthly take-home pay. If it's more, you will be house poor and unable to save or invest. The emergency fund. Do you have your full down payment plus 6 months of living expenses plus a separate $5,000 to $10,000 home repair fund in cash before you buy? If not, you are not ready. The job security. Is your income recession-proof? Do you have multiple income streams, like the side hustles we've discussed? If your job is shaky, buying a home is a massive gamble. The buy premium. In your specific zip code, what's the difference between renting a 2-bed apartment and buying a 2-bed house? If the buy premium is high, it is a clear mathematical signal to rent and invest. The housing rules have changed. The American dream is not about owning a home. It's about achieving financial freedom. In 2025, for some, rushing to buy a home may actually delay financial freedom. Renting can be a smart, strategic choice in today's high-rate economy. In this volatile, high-rate economy, it is often the most strategic, defensive, and wealth-building move you can make. It protects your cash, gives you flexibility, and allows you to build a liquid, powerful investment portfolio while you wait for the market to make sense again. I'm curious to hear from you. In your city, what's the buy premium? What's the difference between the average 2-bed apartment rent and a 2-bed home mortgage? Has this video changed your perspective on renting being throwing money away? Drop your answers in the comments and subscribe for more educational content. Thanks for watching.